Hey guys, so today I'm going to be showing you the 6 words you need to know in order to become financially independent. Alright guys, so first word we're going to learn for today is income. Alright, so that is the amount of money you make over a certain period of time. So let's go over a couple of examples for income, right? We have a job. Alright, a job provides income. Let's say you make $50,000, right? We say $50,000 per year, alright? So income is the amount of money you make over a certain period of time. Usually it's traded for time. If I were to go and work, I am trading my time to get dollars, right? Or currency back, okay? So again, income is doing something in order to get money over a certain period, over having done something over a certain period of time. All right, again, like a job. You make $50,000 a year, we know, okay, their income is $50,000 per year. All right? Second word for financial independence, expenses. All right? So, what are expenses? Expenses are anything that costs you money. So usually we'll say expenses are things such as groceries, right? Or clothes, right? They're required for living, right? We need clothes, we need food, but they cost money. And over a certain period of time, you spend X amount. So let's say you spend per month, let's say you spend $500 on groceries, right? And then clothes, let's say you spend, I don't know, $100. I'll say this is per month, right? So when we say this, these are expenses. Things that cost you money, or where money leaves your account. It's a second keyword, expenses. Again, something that costs money, all right? So third word, asset. Now, what is an asset? Well, an asset is an item that makes you money, okay? So this can be stuff like stocks, right? Perhaps a business, okay? So stocks, you go and you buy stocks, and they use, right here we're talking about dividend stocks. So when we say assets, we're talking about things or items such as stocks and businesses that return money into your pocket or into your bank account, right? So if we buy a stock that has a 3% return dividend, right? Then we get 3% on our investment for the year. So if we invest $100, we're expected to get a 3% return. We'll have gotten $3 over the 1 year time period. All right, a business, all right, it takes money, it takes time, it takes energy to invest into your business, but once it's up and running, it's another item or thing that'll return money back into your bank account or back into your pocket. All right, so let's say you invest X amount of money over time, right, and over the amount of energy needed to start the business, it's gonna return, I don't know, let's say $1 million. So with assets, we know if we have a business and it's worth $1 million, but it's also generating $100,000 a year in revenue, then we know it'll give us an income of $100,000 a year, right? Because that's the revenue we're making. That's the amount of income we're making for the year. Stocks, same thing. If we invest $100 and we get $3 per year, we know that this item or this asset is going to start producing an income, right? Because an income is just something that makes money over a time period, right? So the stock is going to make us $3 of income within the year. So assets, they're things like stocks and businesses and bonds and such that return money into your pocket, all right? So liability, this is anything that you have to pay that is like a debt. So, for example, what is a liability? You can think of it like car payments. All right? car payments. You can also think of houses. You're taking on these two liabilities. So say you go and you buy a car. Hi dealer, I'd like to buy a car. All right, over the next, let's say you're on a 3-year term to pay off your car. All right, now you're paying car payments every single month for the next 3 years. So that's a liability. It costs you money, but you're taking on this debt, right? So it's important to understand that it's important to notice the difference between liability versus an expense. It's usually a cost more for like a good, right? So if you were to pay your car up front, then yes, it could be more of an expense instead of a liability. But here, because we're taking on a debt, right? So we can relate liability with debt. All right. So liability means debt. All right. A house, same thing. It's a liability because we have to pay, mortgage, house insurance, stuff like that, property insurance for the house, right? So these two would be examples of liabilities. All right. So last 2 words we need to know right here. Cash flow. This right here is king, all right? What is cash flow? It is the flow of your cash. Wherever your cash is going, that is your cash flow. So, give you an example. If you have a job, you're making money, the money flows into your bank account. Then you go and you spend it on, like we said, groceries, right? Groceries is what? It's an expense, right? Because we're gonna take the money, for example, we have a job, right? Let's say this is our little bank account here. We'll say squares are bank accounts, cool? So we have a job, pays us money, it goes into our bank account. All right, then from here, we spend money or expenses on groceries, right? Or we could take on a liability such as a house, all right? So boom, we get money, goes into our bank account, but now it flows back out and into this liability right here, a house. Make sense? Again, we said car payments. Try to do my best here with drawing a car. Oof. All right. Either way, we go ahead, we get paid, we save up over time, right? Then we take our cash, right? And we go ahead and we take on this liability of a car or car payment, all right? So why is cash flow or the flow of cash so important? Well, clearly look, if you have a job and it goes into the bank, you need to know where your money is going, right? That's the most important thing with finances. You need to see, all right, where is it that my finances or that my money, my cash is going to, right? Where you're deploying it. Because if you buy this, again, stuff such as houses or cars, you won't be able to take this, right? So let's say we remove this. That didn't do anything. Bear with me. So, let's say we take these three, right? And we decide to buy, I don't know, a stock, right? So we go ahead and we buy, I don't know, Kraft Heinz, right? So this money over time, I think it returns something about 4 or 5%, let's say 4%, right? So this stock is gonna return 4% of the money you put into this in 1 year, right? So we've acquired this asset. The asset is one share, and it's going to produce income, an income of 4% of the money that you invested, or as we call it, the principal of your investment. All right. So when you have this, take this principal, or you're pretty much a principal is just your starting money that you begin to invest with. So if let's say I have $100 and I want to buy $100 worth of Kraft Heinz Company, right? And that is your principal, and you're gonna get a 4% return on that $100, which is $4. So it's gonna go ahead. Let's say 1 year has passed. It takes $4. It takes $4, right? Takes this, puts cash flow back into your bank account, right? So this is why it's so important to understand the flow of your cash or your cash flow. Because if you buy things, I mean, obviously we need groceries, right? We need clothing, you know, basic necessities. But if we go ahead and start spending things on, let's say, large car payments or really large houses, we won't have enough cash flow to flow into obtaining assets, right? Stocks, bonds, businesses, right? Stuff like that. This is why cash flow is so important, because you can either acquire things such as liabilities, things that cost you money, or you can acquire assets, things that make you money, right? So eventually over time, your money becomes infinite because now you have all this time, right? Think about it. If we have, let's say we invest, I don't know, something crazy like $1 million into Kraft Heinz and you get a 4% return, right? That's $40,000. $40,000, you'll cash flow back into your bank account, all right? So that's why it's so important, because now you have all this time to do these other things, and it allows your money to make you more money, all right? And not only that, this is per year. So over time, if you take that 40,000, keep it in your bank account, right? Maybe reinvest it back into more Kraft Heinz or more of another business or another investment. You obtain another asset that you want to grab. It'll go ahead and make you more money, and it'll snowball over time. That's why cash flow is so important. You want to understand where it is your money is going. So we're going to go ahead and say income. All right. Income is the amount of money we can make over an X period of time. Amount of money that comes to us, all right? 2, expenses. So if you notice, with income and expenses, it's more of money and time, all right? So we'll think of these two as money and time. All right. 3, assets. 4, liabilities. 5 and 6, cash flow. So these two, income and expenses, relates more to money and time. You trade your time to receive a certain amount of money over a period of time. Assets and liabilities, they're more tangible things. Granted, stocks aren't necessarily tangible, but they are things that you can purchase that go ahead and either make you money or cost you money, right? So we can think of these more of like perhaps items / tangible goods, all right? And it can be, again, an asset, can be an item or a good that makes you money, whereas a liability is an item or a good that costs money, all right? So it's important to kind of see that this is more of money and time, whereas this is more of items or tangible goods that either make or cost you money, all right? And cash flow is pretty much seeing the flow of all your cash between your income and expenses and your assets and your liabilities. I hope you guys enjoyed. Again, income, expenses, assets, liabilities, and then cash flow. Now you know the 6 words you need in order to become financially independent, all right? I hope you guys enjoyed today's video. Please make sure to smash that like button. Don't forget to subscribe if you haven't already. I'll catch you on the next one.